Okay.
Hello viewers, welcome to our today's lesson. Today we are going to talk about financial statement analysis. Now, from the feedback that I got from my viewers, majority of you asked me to talk about financial statement analysis. So I'll start by it. Financial statement analysis. Financial statements analysis. Now, this is a very important topic. You will find it in financial management, that is at intermediate level, CPA. You'll also find it in advanced financial management in advanced CPA topic. It's a very important topic. We are going to look at what is financial statement analysis. What is analysis of financial statement? Then we are also going to discuss the various uses of the financial statement analysis. Who are these users of financial statement? We're also going to look at sources of financial information. How do you get these financial statements? Through the audited report, through the companies, the listed companies, and all those other sources. What are these sources of information of financial statement? We are also going to look at the comparison analysis, the comparison of the financial statement. How do we do it? We have the time analysis. Time analysis is where now you compare the performance of an organization or a firm over a given period of time. We are also going to look at the cross-section comparison. That is where you analyze the performance of the firm against the competitors. We are also going to look at the users. Who are the users of financial information? The users of financial statements. Who are they in an organization? That is ideally tells you why do organizations they publish their financial statement. So that is all that we are going to look at. Then we are also going to look at financial forecasting. So remember we said we are going to look at definition of financial analysis. What is it? What is financial analysis? Then we're also going to discuss the users of financial statement. Who are the users of financial statements? These financial statements, who are the users? We're also going to look at to discuss into detail ratios, financial ratios. Yeah, this is because the analysis of financial statement, we can't do it without financial ratios. We are going to look at these ratios into detail. What are these ratios? Then we're also going to look at comparison analysis. Comparison analysis, where you analyze the firm, the performance of an organization against the competitor or the competition. That one we call it cross-sectional analysis. Or we are going to analyze it using the time analysis. Time analysis where you analyze the performance of an organization, the performance of a firm over a given period of time. For example, year A against year B. How is that business or organization performing? Then we are also going to look at what we call financial forecasting. Financial forecasting. What is financial forecasting? We are going to look at financial forecasting. What is it? Then we are also going to look at, after financial forecasting, we shall look at limitations. Limitations of financial analysis. So what are the limitations of financial statement analysis? Remember, this is just an examination analysis, so it will have some limitations over a given period of time. Now, when we start off financial statement analysis. What is analysis? Analysis is simply examination, a detailed examination of accounting information on financial statements to help us make decision. Now we talk of financial statement analysis. It is examination, a detailed examination of the accounting information on the financial statement. Now, what are these accounting information? Accounting information can be, for example, assets and liabilities. You want to examine them or critically look at them. You want to look at them critically or examine them critically to help you make decision in a firm. So that is what we call an analysis. So you are comparing the comparison of the components of financial statements. You compare the components of financial statements to help you in making decision. So that is simply what we mean by financial analysis. So you are doing that detailed examination of the financial statement. So you look at the components of the financial statement. What are the components? For example, if you take a balance sheet, a balance sheet which we also call statement of financial position. So you look at the components of the balance sheet, like it has assets, liabilities, and what? Financed by, or the capital. So financed by or capital. So you are looking at, you are examining these components of a balance sheet, for example, as one of the financial statements. Financial statements, we can have a balance sheet, one of them, or statement of financial position. We can have profit and loss account, which we call income statement, and we can also have a statement of cash flow, that is cash flow statement. So you are analyzing the components of these financial statements to help you in making decisions. So you critically look at it. For example, liabilities. What is the trend in liabilities in that organization? Where liabilities can be divided into two, as we had discussed earlier about the components of a balance sheet. You look at assets. What is the relationship? Which relationship does that asset have? Or what is the trend? So generally, analysis is critical examination of those components of financial statement, or critical examination of the accounting information on a financial statement to help you in making decisions. Now, what are these? Who are the users? Now, when you are analyzing financial statement, the financial statements have users. Companies publish their statements with a targeted view. So they are users of those financial information. This analysis, why do we give that critical analysis, that critical examination? Why is it important? There are users. We have users or potential users. Who are these users of financial analysis? Now we call the users. Now, who are the users? Users, one, are the shareholders. Very important. Who are shareholders? These are the people who have invested in a firm. They have invested in that company. They are the owners of that company. So these people are very concerned about profitability of that firm. Is that business making a profit, if you can say? They are the owners. Remember, they are the people who have invested in that business. So they are concerned with the return on their investment. They are concerned with the return, the expected return on their investment, whether it is on a capital gain or it is on dividend. Capital gain is simply the share capital on it. So shareholders are very important, as in they are one of the users of the financial statement. So we do analysis to help them. Analyzing the statement will always be helpful to shareholders. Shareholders are the owners of the business, the owners of the firm. These are the people who have invested in that organization. They have invested in that firm. So they want to know the profitability of the business, the profitability of that firm. So what are they concerned with? These people are concerned of the expected return on their investment, expected RIO, expected return on investment, ROI. They want to know whether whatever they have invested, what is their expected returns, whether in form of capital gains or in form of dividends. Another users are the lenders. Lenders. Who are lenders? Lenders can be short-term or long-term. Short-term lenders, like now the trade creditors, the suppliers who are there, and long-term lenders can be financial institutions like banks, can also be bond holders in that case. Now, these people, this information is very, very useful to them because they will look at the liquidity of that farm. Is the farm able to meet those short-term obligations? Are they able to get their debts on time? Are they able to get it on time? Then we have potential investors. Potential investors. Potential investors. These are people who will wish to invest in a farm. They will be concerned of the profit, whether the business is making the profit or not. What is the returns on the investment, just like shareholders. So they are very useful. Then we have the government. Ideally, government will be concerned about tax liability. Is the farm able to pay tax when they fall due? If it is a public corporation, then the government will be interested in knowing whether that farm or whether that company is able to continue providing or charging the services that it is given to do. So government is very important when it comes to that. Then the company's management. The company's management. The company's management. The company's management, these are now the people who are tasked with the responsibility of managing that organization. So they will always use this financial statement ratios or analysis to help them engaging the efficiency and effectiveness of that farm. Usually it is perceived, which is true, that effectiveness of a farm, when a farm is making profit, when a farm is able to pay the debts or the short-term obligations, then that tells you that the management is effective. So the management will use ratios like working capital ratios, the gearing ratios which are there, the investor ratios. So the ratios will help the management of the organization to gauge the effectiveness of the farm. Then lastly, we have the competitors. Competitors will ideally, what will they will do is to gauge or to compare the performance of that organization in the competition. How are they doing when you compare it to the competition or to other businesses? So the competitors will always gauge, they will compare their performance against the performance of that firm. Then lastly are the consumers. This very important. They will be able to know whether the firm will be able to continue providing goods and services which are being used. So that is very important. One thing that I will want you to know as we wind up today's lesson is the definition of financial statement analysis. What is financial analysis? Financial analysis is critical examination of the components of the financial statement, or the components or the accounting information on the financial statement to help in making decision, where financial statements can either be an income statement, which we used to call P&L account, then also balance sheet, which is now called the statement of financial position. It can also be the cash flow statement. So you are analyzing the relationship between the components of these financial statements in making decisions. And now, when you are doing that, how do you do it? Ideally, when it comes to analysis, ratios becomes very important. So we do analysis using financial ratios, as we will see. Now, who are the users of this financial statements, or the users of the ratios? The users of this analysis that we are doing can be categorized into, now we have the users and users. The users are the shareholders. One is shareholders. Who are shareholders? Shareholders are the people who have invested in that business. They are the owners of that business. So they will always be concerned of the expected return. How is the business doing in terms of profitability? Are they able to get their dividends when they fall due? Lenders can be short-term or long-term. These are the short-term can include trade creditors like the suppliers. They want to know how liquid is that business? How liquid is the business? They are concerned with the liquidity of that business, ability of the business to do what all of the firm to meet the obligations when they fall due. Then potential investors. These are people who would wish to put their investment into that firm. So they will be concerned with the profitability of that business. Is the business growing? That government will be concerned about tax liability. Is the firm able to pay tax, or how much tax should the firm pay? If it is a public corporation, then government will always be concerned on its mandate to provide the services that it is charged with. Then the management, very key pillar. They will be able to gauge the effectiveness and efficiency of the firm, whether the firm is making profit or not. So that is where here the management will use ratios like gearing ratio, working capital ratio, investor ratio. Then competitors will always be able to look at the statements of the reports of the competition to help them do the comparison. How is the business doing compared to others in the market? Then consumers are now people who use the goods and services provided by the firm. Now they will be able to know whether the firm or the business will be able to continue providing such goods and services. Now, next time we are going to look at the financial ratios. What are financial ratios and how are they when it comes to financial analysis? And the rest of the topic we shall look at it. For now, I will end it there. I welcome you. Subscribe to this. Subscribe, watch, share it. Comment if there is any topic that you want us to discuss on finance and accounting, which level, be it the CPA 1, CPA 2, CPA 3, whichever level, be it degree, just feel free, comment, tell me, we will discuss it at length. For now, I give you time to absorb whatever we have talked about. Feel free. Bye bye. See you.